Last week, 2 weeks ago, there was an announcement that State Farm said we are no longer providing homeowners insurance in the state of California. It was a big blow because State Farm, I think, is like 15% of the policies in California are held by State Farm. And then right after that, Allstate announced exactly the same thing. And they said, nope, we're out. What the heck is going on? And why are these insurance companies pulling out? Well, the first thing I'll tell you is this isn't unique to California. This has happened in other states, in the Gulf states, Florida. Again, I don't know exactly which states, so I'll say just in the Gulf states. There have been insurance companies pulling out because of issues with hurricanes and saying, look, we can't afford to continue to insure in that state because we're losing money. And that's really what State Farm and Allstate are saying in California. The cost of insurance in California has gone up significantly, not just for the consumer, but for the insurance company. And insurance companies are not in business to lose money. They're in business to basically take money from every single person and put it into a pool and then pay out a large amount to few people. And they have profit left over. But with inflation and with the state of California being unwilling to allow the insurance companies to increase insurance premiums as much as they've seen inflation go up and as much as they've seen the number of claims go up, the insurance companies are basically saying we're destined to lose money. Now, I think what we're in the middle of is a game of chicken between the insurance industry and the state of California. Now, I might be wrong. State Farm might be pulled out completely and permanently, but I've heard some rumors that this is temporary. And really, they're playing a game of chicken by saying, let us raise rates high enough that we can continue to operate in the state of California. We've got to be super careful because if the state of California, the insurance commission, does not allow insurance companies to raise rates high enough to cover what their costs are, then we're going to be stuck with essentially an insurance program that is funded by the states that gives you very, very little coverage for a very, very high cost. It's not very different than what we're dealing with in wildfire coverage in the high wildfire areas. Most insurance companies have said, look, I just won't write policies to cover fire damage in an area that is in a wildfire prone area because California's had so many fires, we're just destined to lose money. So a new program was created a few years back called the California Fair Plan. Now, the California Fair Plan is basically the state putting together this insurance that requires all insurance companies that operate in the state to participate. And so every insurance company in the state takes the risk of the Fair Plan. And that's one of the conditions of them operating in the state of California. Well, maybe State Farm said, you know what? Not only are we not making money on our regular policies, but we are being forced to participate in the Fair Plan. And if we pull out and we don't issue insurance in California, we don't have to worry about being a member of the Fair Plan. So there's a lot of challenges here because, first of all, if enough insurance companies pull out, the state's not going to have much of a choice but to create kind of another version of the Fair Plan that covers everything else, not just wildfire. But there's nothing fair about the Fair Plan. It's super expensive and it's got very, very low coverage. It's not much different than some of the biggest insurance companies in the world. The one I'm thinking of right now is Lloyd's of London. Lloyd's of London is basically an insurance company of last resort. They will give insurance, but super, super expensive and super low coverage. That's the direction we're headed. And I don't know where this is going to land, but I do know that if we see more insurance companies pull out, we're going to have a bigger challenge in the state of California than what we have already. And I know nobody wants to pay higher insurance premiums, but look, it's the cost of insuring a home. It's the cost of the risk that is involved. And so it's just like if you're going to buy a Lamborghini, you got to pay higher insurance because you have a high risk car. Well, guess what? You live in a state like California where we have a lot of natural disasters and a very expensive region. Combine that with inflation and the cost of everything going up significantly. If the state continues to simply say, no, you can't raise your premiums more than this much because we're trying to protect the consumer, you don't protect the consumer very much by driving away all of the competition. That's kind of the opposite of protecting the consumer if there's no competition for them to choose from. So I think we got a major problem on our hands. I'm not sure where this is going to end up, but stay tuned and I'll keep you updated.